How's it going, everyone? It's Sam. I am so happy to come back to the TipRanks channel. I do this every single week from the channel My Financial Friend, and we are looking at Palantir after their earnings yesterday. We're going to take a look at Tattoo Chef because they have their earnings coming up after the bell today, and Disney after the bell. So we'll give a little bit of an earnings precursor to those companies. If you guys don't mind hitting the like button, I really do appreciate that. It helps out the channel a lot. Also, hit subscribe. We're on the road to 25,000 subscribers. We cover all different kinds of companies, give you the analyst expectations and analyst estimates, and take a look a little bit deeper into the stocks. So thank you guys for that. If you guys want links to anything in this video, you can definitely look underneath the video because I have links to different tools that we're going to use. And if you guys want a competitive advantage, you can check out TipRanks Pro underneath the video. There are also timestamps too in case you want to move around to Palantir or Tattoo Chef or Disney. So Palantir has a moderate sell from analysts. So actually a pretty negative sentiment from analysts. You can see that even though it's up 11% on the day, they are saying that the average analyst price target on Palantir is $17, a 31.4% downside. Now, one thing that I do really like about TipRanks is that you can take a look at what insiders are doing. And this is one of the things that most newbies to Palantir get really worried about. They get worried about Alex Karp, the CEO, selling a good amount of shares. But you can see, before we get into the earnings here, you can see that the transactions are all uninformative sells. So these are just planned, these are scheduled, and it's just a way for these different executives to diversify away from where the majority of their money is, which is in their own company. So he does sell about 40 to 50 million every single month at this point, but that kind of makes sense, right? If you are the CEO, to diversify your income. I think the majority of us don't have all of our assets at the company that we're working at. So that kind of makes sense for them to diversify a little bit of their money away from the company that they're working at and making money in. Now, we had some big news from them yesterday. They had some killer earnings, which is why they're up 10.5% today. So let's take a look at them here. Revenue grew 49% year over year to 376 million. This is actually a large increase even from last quarter. As we look here on TipRanks, we had 340 million just last quarter. So that grew nearly 10% just from last quarter. We could see that we've been growing consistently by a significant amount. Again, 33 million there, and then 19 million here, and then 35 million this newest quarter. US commercial revenue grew 90% year over year. This is one of the largest problems with Palantir in a lot of people's minds, is that they are largely a government contractor. They closed 62 deals of $1 million or more. So they're diversifying around their business. 30 deals of 5 million or more, 21 deals are 10 million or more. 20 net customers added in Q2 2021, total customers up 13% quarter over quarter. Pretty significant growth. Commercial customer count increased 32% quarter over quarter. Cash flow from operations of 23 million, representing a 6% margin. Adjusted free cash flow of 50 million, representing a 13% margin. GAAP net loss per share diluted of 7 cents, adjusted earnings per share diluted of 4 cents. From Q3, we expect 385 million in revenue, so setting the bar maybe a little bit low because this is only 10 million more than they had this quarter. Adjusted operating margin of 22%. For the full year, we are raising our outlook for adjusted free cash flow to 300 million from 150 million. Per long-term guidance policy, as provided by our CEO, we continue to expect annual revenue growth of 30% or greater through 2025. They reiterated this revenue growth. Also, I think it is worth noting that they are making some investments in SPACs. So they have a very strong balance sheet as of now. And they said that over the quarter, they made 250 million in investment commitments to SPACs. They had disclosed 132 million in SPAC-related investments in March, back in the March quarter. Now, only 1% of the revenue, about 3 million, was tied to companies where Palantir made that investment. So that is worth considering too. Now, one other thing that's worth considering is the fact that ARK Invest still holds a large position in Palantir. They hold almost $600 million, and they're not the be-all and end-all but I think it is a positive sign to see such a great investor like Cathie Wood investing a large portion of their money in Palantir. You can see that people are very positive about Palantir here today, jumping about 10.5%. Now moving on to Tattooed Chef, they have their earnings later here today, and analysts do not have a strong upside potential for Tattooed Chef. They actually are saying that 1 year potential is -5%, price target of $19. Now, what are we expecting here today? Well, the two analysts that cover them are expecting about 54.05 million, which is not much more than they had last quarter. They had 52.7 million. So I would not be surprised if they actually beat this. That's only 1.3 million more than they had last quarter. And they're growing really quickly. They have more SKUs, they have more partnerships. So I would not be surprised if they actually beat this estimate. Last quarter, they had a net loss of 7.9 million. We also have Disney announcing earnings after the bell today. They have a 18.4% upside according to analysts, and they are definitely on the comeback from the pandemic. We can see that they have been growing their EPS. They're estimated to have about $0.55 worth of EPS this quarter, and they are expecting about 16.8 billion worth of revenue. This is coming from 23 analysts. Now, next quarter, they're expecting about $19.1 billion worth of revenue, so a significant increase next quarter with earnings per share of 0.68. It's going to be interesting to see if they're getting back to normal, and we can expect larger profits here in the future from such a giant in the industry. So thank you guys so much for watching. I really appreciate it. Please hit subscribe and hit the like button down below. If you guys want, you can definitely go through the description of the video and find some of the tools that we used here today. Thank you, and I will see you in the next video. Bye.